Hey Bowtie Nation, Joseph Hogue here with your weekly stock market update, 9 a.m. Eastern every Monday morning with the stocks to watch and the stock market news you need to see. The DeepSeek news last week sent AI and hardware stocks reeling, and while I think the theme rebounds and there are still some stocks to own there is one group that just looked at the market sell-off, winked, and jumped higher. I already own over $216,000 in these stocks and am buying more right now. I'll reveal the 5 stocks I'm buying, why you need to be investing in this trend, along with the stock market news this week and earnings updates for Palantir, AMD, and MicroStrategy. But first, I want to highlight a special offer on one of the sites I use for stock research. I've used premium access on Seeking Alpha for more than 7 years to get analysis and ideas, and more importantly, to make sure I'm getting the bull and bear case for a stock. You'll find pre-built stock screeners for top-rated stocks, dividend yields, and growth stocks, and you'll be able to sit in on a company's earnings reports to get the inside information. Look for the link I'll leave in the description and you'll be able to try premium access risk-free for 7 days. If you like it, that link will also give you a promo code for $30 off the regular price, so make sure you check that out. Back to our main topic, and in all the mayhem that was last week's market, there was one group that just shrugged and kept running higher. I've been calling cybersecurity my #1 growth theme since early last year, and folks, if you haven't started buying these stocks, getting exposure into that theme, what are you waiting for? With a 20-fold increase in malicious programs just in the last decade and 10 million people affected in 2022 alone, cybersecurity is already a $116 billion addressable market. And with AI transforming the threat landscape, making attacks easier, the market is expected to grow to $250 billion by 2029. That is a 21% annualized growth. In fact, just hours after DeepSeek shook the world, the app was hit with a large-scale attack and forced to limit registrations. So here, you've got the proverbial rising tide in cybersecurity theme lifting all stocks, but the leaders, those with the competitive advantage, are going to be growing even faster. Now, I've updated my research into the 7 pure-play cybersecurity companies for revenue growth, operating profitability, and valuations. The group here posted an annualized revenue growth of 45% over the past 3 years. That is a 3-fold increase in revenue over that period. That beats the doors off the revenue growth at every Magnificent 7 company except NVIDIA, which only barely beat it with a 53% annualized growth. Now, the operating margin or profitability has fallen here for the group on an increase in the capital spending over the last few years. That's to be expected as the companies sacrifice those profits to compete for that growth before dialing back for efficiency later. Now, of course, along with just about every other stock in the market, valuations have gotten a little out of hand, and stocks are expensive, with every one of the group priced at 50 times price to earnings or higher. But folks, the problem with waiting for the right price and valuations, and this is something that caused me to miss out for years, is these stocks are never cheap. When you've got an industry growing at 20% plus a year, and the leaders growing revenue at 45%, there's always going to be a premium on that stock price. Not all of these companies have been around for 10 years, but putting them on a chart, you see an average 705% return over the period. That is a 23% annualized return, and other than the pandemic crash, very few sell-off opportunities. These stocks are always expensive, but they continuously head higher. And so I waited until just a couple of years ago to start investing in this theme, waiting for years for these stocks to become cheap, and missed out on a lot of that return, but I'm still up more than 25% on average, and now riding the trend higher. I'll reveal the 5 stocks I'm buying, but an easy way to get exposure here is through the First Trust Cybersecurity ETF, ticker CIBR, which holds 32 stocks in the theme, and is up 111% over the last 5 years, for a 16% annualized return. Now, while it is an easy one-stop investment, it's not my favorite here because if you look at the holdings, you see a lot of stocks that aren't those pure plays in cybersecurity. You've got the pure cybersecurity companies that we'll look at like CrowdStrike, Palo Alto, and Cloudflare. But you've also got related stocks like Broadcom, Cisco Systems, and F5. Now, that's not saying that these others aren't good stocks, but it's not the focused fund I'm looking for in the theme. One thing I do like using CIBR for is for looking through these holdings to make sure I'm finding and analyzing all the potential pure plays in the theme, like I hadn't been watching Okta until recently when I saw it in the fund. I'll highlight those 3 pure-play cybersecurity stocks I already own, along with 2 I'm buying right now, starting off with my biggest position, CrowdStrike Holdings, ticker CRWD, with $119,000 and 300 shares, up 43% for a profit of $36,000 so far. CrowdStrike leads in the software's ability to work on a multi-tenant basis across endpoints and has clear tech advantage in its Falcon platform. Now, I jumped in after the July outage as one of the few big opportunities you get in these stocks. CrowdStrike has booked a 51% annualized revenue growth over the last 3 years and is one of the few to maintain a positive operating profit even against the increases in capital spending. That dominance has made the stock expensive here at 128 times PE, but it's hard to deny that this one is going to continue to ride that trend higher. Shares jumped more than 8% on news last week that the platform achieved 100% detection, protection, and accuracy in the most recent SE Labs EDR test. Here, a relatively newer position for me, shares of Palo Alto Networks, ticker PANW, with 200 shares up 18% since I started buying last year. As the largest pure-play cybersecurity company, it has the scale to provide that all-in-one enterprise security solution, and is trusted by companies and governments with over 65,000 customers. At just 50 times on a price-to-earnings basis, and I can't believe that that's considered cheap, but that's where we're at right now. Shares are one of the cheapest in the group. My second largest position in cybersecurity is in shares of Zscaler, ticker ZS, with just over $60,000 on 300 shares, up 17% since I started buying last year. Zscaler changed legacy cybersecurity from a network and firewall architecture to a zero-trust model in the cloud, and that first-mover disruption accounts for its amazing revenue growth. The company is still unprofitable on a GAAP basis, but booked a strong 43% annualized growth over the last 3 years, and isn't quite as expensive as others like CrowdStrike. Now, besides Zscaler's growth and relative valuation, I also like it on a recent tie-up with CrowdStrike. The two are launching a new set of AI and zero-trust integrations into CrowdStrike's Falcon software to coordinate threat sharing, detection, and response. Zscaler's Zero Trust Exchange and CrowdStrike's Falcon software are each company's competitive advantage in the industry, and combining them, I don't think there's another company that can beat it. I'll be adding more Zscaler and Palo Alto Networks, but also buying shares of Okta Inc., ticker OKTA, on its industry-leading identity management, where cybersecurity starts. Okta's multi-layered platform helps validate identity, identify threats, and continuously adapts. Over 19,000 customers and 7,000 platform integrations. The company reports a 108% dollar-based retention rate, which means once a customer integrates into the platform, they typically add on services, leading to dependable revenue growth for Okta. Okta didn't quite make the top 3 for growth, but was close and is the second cheapest in the group for when adjusting for that valuation on that growth. As one of the smaller companies at just $16 billion, I wouldn't be surprised at all to see another company try to buy this for its leadership in identity management. Another cybersecurity name I've been looking to buy for a while, shares of Fortinet, ticker FTNT, on its group-leading profitability. More than 2/3 of Fortinet sales are in network security, while the company sees stronger growth ahead, and it's got good product lines across all 3 business segments, networking operations and SASE. And the company is not only benefiting from the rise of AI through increased security demand, but also implementing AI into products to instantly detect and mitigate threats and at a reduced cost. That's helped make Fortinet the runaway leader in profitability, even if that growth has slowed a little. It's still posting very strong earnings growth as well, helping to make it the cheapest on the list when adjusting valuation for that growth. Now, looking at the stocks I'm watching this week, Lamb Weston Holdings, ticker LW, doesn't report earnings until April 2nd, but could start trending higher on results from fast casual restaurants. The company is the market leader, supplying 40% of the North American frozen potato market and a primary supplier to McDonald's, which accounts for 13% of Lamb Weston's revenue. Years of inflation caused a plunge in traffic for restaurants and fast food, and Lamb Weston was one of the worst stocks in the market last year, down 41%, but could be ready for a rebound. The company announced a major production closure last year that would result in a $55 million pre-tax savings, along with a reduction of $100 million in capital expenditures. And there, just as it's getting more efficient, lowering those costs, the industry is also showing signs of a turnaround. Early earnings reports by Red Robin and Noodles & Company showed sales trends improving late in the fourth quarter, and industry data on same-store sales grew in October and November. Shares of Lamb Weston are trading relatively cheaply for 12.6 times earnings versus an average closer to about 18 times in the past. That's a 30% discount. Now, I'm not calling this one a long-term investment on its high $4 billion in debt and slower growth expected, but there is definitely room for an upside surprise here in the next few months. Also watching Advanced Micro Devices, ticker AMD, reporting its earnings on Tuesday and is one of the few value plays in the AI chip theme. While NVIDIA will still dominate that AI chip market, its Blackwell chip is taking longer than expected to ship and is a very high price point. That's going to open up an opportunity for AMD to take some market share. Plus, AMD recently got a boost to its market share in gaming after Intel's Arrow Lake chip was a massive failure. Both IBM and Dell have recently announced major partnerships with the chipmaker lately. While AMD is struggling with a slow demand cycle in laptops, It's still expected to grow revenue by 26% this year to $32 billion. And one thing the market isn't watching, as AI evolves from that training models into inference, chip performance won't quite be the issue it's been. That could further open up that growth for AMD, with shares already trading very cheaply at just 6 times on a price-to-sales basis, where it typically trades closer to 8 or 10 times sales. Now, analysts have been absolutely brutal to the stock lately, writing it off completely, which means any good news could bring a big bounce. One of my favorite stocks here, Symbotic, ticker SYM, reports its earnings on Wednesday, up 18% since I started recommending it in December, though still down 28% over the last year. This is the AI logistics company to own, with the stock up double digits after an announcement to acquire Walmart's advanced systems and robotics business. Walmart already owns 14% of the company, and this further cements that partnership, putting Symbotic in charge of robotic warehousing and delivery automation for the world's largest retailer. The company already has a revenue backlog of $23 billion, with this deal expected to add another $5 billion to that. And remember, this is a company expected to post just $2.3 billion in sales this year, so that backlog could mean 30% sales growth for years. Looking at the bigger picture here with the Sector Spiders sector tracker, 5 stock sectors managed to close higher last week and with surprisingly strong returns versus the 1% decline in the broader market. Now, while the upside in stocks for consumer discretionary and staples may be short-lived if the consumer spending weakens further, those gains in communication services, financials, and healthcare stocks looks more robust. Now, I highlighted healthcare stocks, particularly pharmaceuticals, in last week's market update as the surprise upside coming when Q1 earnings start in April, and it seems the market is catching up to that idea. On the other hand, tech stocks are off to a bad 2025, with the sector down 0.74% over the last month, against a market that's up 2.7% for the year. There is relatively broad strength in the rest of the market, so I'm not yet worried about a crash, but investors need to be watching that tech sector and some of these headline stocks. In every crash over the last 25 years, every one since I've been investing, the sell-off started with stocks most associated with that boom and then spread into the broader market. It was the overpriced internet stocks in 2000 before the rest of the market tumbled. Then in 2007, it was the mortgage finance companies that broke lower before that disease spread to the financials and then the rest of the market. If the recent weakness in stocks like Nvidia, Apple, Microsoft, and Broadcom, if that spreads more broadly into the tech sector and then other sectors, that's going to be your first clue to protect your portfolio before a bigger stock market sell-off. Get your $30 discount and try Seeking Alpha Premium 7 days risk-free. Go deep into your research with the bull and bear analysis and sit in on earnings reports for the inside information, all with that special coupon code in the link below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.